This is part 3 and a wrap-up of my video of entering a bill, specifically a credit card, in QuickBooks. Watch the video 1 and 2, please, before this one. I'll be continuing with we've entered the vendor, the date, the reference number, which I just used the date and month combined, the total amount due, because I'm doing this example as if you pay the credit card statement in full every month, and I went over this in the first couple videos. And after you enter all the expenses, this number will total up whatever this number is. If it doesn't, it won't let you save it. Now there's nothing happening, but I'm going to show an example. If I had entered one of these numbers, or a couple of these numbers in error, I'll take a nickel off of both of those. For some reason, if I click down here, it will want to correct it. Save and new. This transaction is not in balance. I hit OK. It's not in balance. Now in some, there we go. See, it wants to put a 10 cents here because it knows it's off. It won't let you save it. If you say this is the amount due, and just like any other bill, this amount, the whole amount, will go into the liability account called accounts payable, money you owe. And you have to account for every expense you're paying. And for every penny you're paying, you should show an expense. So I'll enter back in my nickels, because that is the proper way of doing it. Those amounts are correct. Just to review, when you enter all the fuel, which I have generic gas stations here, you will add up to $150.65. I just made that error to show you what would happen. So this expense account, each expense account is different, and I have a video on chart of accounts, but each account is separate. Like there's a fuel expense account that just has everything that's been debited or credited with a number, any dollar amount. And this amount will increase this expense account. This amount will increase this expense account. Now in some scenarios, you can do credits, and you don't always have to do an expense account. I don't have an example for that right now because it might get too complex and be a 30-minute video. But sometimes you may pay for something that, and I don't recommend this, but just as an example, just to demonstrate this. This is not something you should necessarily do. But if an employee wanted an advance on their paycheck, and it was purely for gasoline, you might put something in here that's an advance. Now, I do not have an advance account set up. An advance account is just an other current liability. An other current asset. And one moment. Okay, I'm back. I just had to pause a moment. The advance account is an other current asset account. If you were to debit that here, you wouldn't put that fuel charge that you knew was for them, and you'd want to mark it. So when you got this statement somehow, maybe this one was, you wouldn't call that your expense. You'd put it in an asset right down here, and you'd move that amount out of there down to here. So you'd want to, and then that would go into an asset account. But that's not something I wanted to get into right now. We're entering this credit card statement as if these are your charges, company charges, and they're divvied up by the type of expense: fuel, automotive, office supplies. Now, someone may have bought a case of paper and some ink. Someone may have bought a cheap laptop. Up here in meals and entertainment, they've gone out with clients or employees for meal or entertainment. I'm not getting specific on what qualifies as an expense account right now, but I'm being pretty general. So this would wrap up this third video, because what you would do is, now that this ties out with this, and everything's entered right, you would have an address in here. The address would show probably on the pay stub of the credit card as a remittance address. Just in review, that would be it. You hit save and close. You have changed the terms. Now, net 30 was not in here because I just set up this vendor, this credit card vendor. I'm going to hit yes so it appears next time. That means every time after this, they will default to net 30. It is now saved as a bill. If I were to go to vendors, again, vendors are people you pay generally, pay bills, this box shows up of all the bills in here. Here's the credit card vendor. Due date is the 10th of May, and there's the total amount. So I entered the total amount to be paid. I'll close this, and I'll hit Control F, and I find a bill. I don't have much in this fake company, so I don't have to be very specific. I'm going to hit Find. Credit card. In future videos, I will be showing you how to, if you don't want to pay the full amount, you wanted to pay the minimum or another amount other than the full amount, there is a way to make a, in the chart of accounts, to make a liability account, where you could offset the amount you're not paying on the credit card. It still do, but you would offset it to there. But this, again, I'll show that on the next statement, but you'd still always put the expenses, in my opinion, for this statement date correctly. But what you would do is, for example, if you only, I guess I will explain this. If you only wanted to pay the minimum amount, which is on this pretend invoice statement, minimum amount 30. For some reason you only wanted to pay 30, that's fine. What that does is it says you're only paying 30, but you had $755. I'm going to delete that and tab away. See, if these expenses add up to $755.06, if you only want to pay 30, it knows you're negative $725.06. This is a rough example, and I'll get into more details in future videos. But here's where you would put the liability account. I don't have one right now. Other current liability. That's not a good example. That's not one. But there would be another one I would simply make, and it would be called something like due to credit card or credit card balance. I would use the specific name of the bank and Visa or MasterCard or whatever credit card you're using. By me making this a credit, in all bills and checks, these numbers automatically will debit that account. But once you put a negative in front of it, it does become a credit. And if you look at my video, Understanding Credits and Debits, it will credit the liability account, making it go below zero. Well, that's a liability, something you owe. And you would have that balance there still owed. And if you ever paid it to the credit card, you would need to make a bill or a check to that credit card or pay it online. And you would simply debit the liability account later. But I'll delete that, and I'll make this. I'll get into more detail on some of that other stuff later. Standard credit card, entered correctly, the amount due, save and close, and that wraps up entering a credit card in a very basic way. Thank you for watching.